What if I told you, everything is connected that will continue to shape your thoughts, feelings, and how you make decisions? Always watch actions and not words, and if you don't understand what's happening right now, you're going to get emotionally wrecked by the markets. Let's break it down. Bitcoin in retirement accounts? Yes, Indiana is preparing to integrate Bitcoin into public retirement plans. Let that sink in. The same asset that your uncle called internet scam money is now being considered for pension portfolios. Meanwhile, BlackRock keeps buying, Morgan Stanley is filing for crypto custody, Citi and JP Morgan Chase are expanding digital asset services. Banks, crypto is risky, also banks, will custody it for you. This is not hype, this is infrastructure. Stablecoin wars begin. Regulators are circling stablecoin yields. Circle is launching USDCX on Cardano. Federal regulators are moving to restrict stablecoin rewards. US lawmakers are revisiting yield concerns. Tether has frozen $4.2 billion linked to crime. This is the tightening phase before institutional greenlight. Stablecoins are becoming regulated money market funds with blockchain rails. XRP, tokenization and Wall Street moves. Ripple leadership, Brad Garlinghouse, David Schwartz, are doubling down publicly in 2026. And here's what most people are missing. $10+ billion in tokenized US Treasuries, $280 million in diamonds tokenized on the XRP ledger. Institutions experimenting with blockchain settlement rails. This isn't about moon memes. This is about Wall Street rebuilding the plumbing of finance. Slow, boring, massive. Bitcoin crashes. Again. Bitcoin dropped around $63,000, but currently reaching for $67,000 at the time of this post. Headlines scream, retail all in, no floor. Panic spreads on every small price decline. That's volatility for you. Where are your diamond hands? But here's the twist. Businesses were the largest Bitcoin buyers in 2025, and are expected to be the largest Bitcoin buyers in 2026. Not Reddit, not TikTok traders, corporations. When retail panics, institutions accumulate. We've seen this movie before. Volatility is not failure, it's liquidity transfer. War, gold and market fear, explosions in the Middle East, US and Israel attack Iran, defense stocks rising, gold steady and bullish. Oil prices may rise again, which will impact gas prices and household budgets in the US. Crypto drops first, because it's liquid. Gold stabilizes, because it's ancient. Silver spikes, XAG above $90 projections. That doesn't mean crypto is broken, it means liquidity runs to safety first. If you panic every time geopolitics flare up, you're playing checkers in a chess market. Robots are coming for payroll. This is where it gets uncomfortable. BMW adding humanoid robots, DoorDash deploying delivery bots, Chinese robots walking 130,000 steps at -47 degrees Celsius, Google pushing robotics platforms, Burger King using AI to monitor employees, companies cutting workforce by 20–30%. Meanwhile, AI productivity is exploding. OpenAI signing Pentagon deals, markets reward efficiency, workers feel pressure. We're in the middle of a productivity revolution. And productivity revolutions always create volatility, in labor and in markets. Is a recession coming? Jobless claims, modest, mortgage rates under 6%, bank stocks sliding hard, layoffs in finance rising, social security, depletion moved up, spending at bars up, retail alcohol sales down, consumers are selective, not dead. This doesn't scream collapse, it screams transition, late cycle tightening, capital rotation, structural change. Big picture. What's really happening? Here's the real macro story. Governments are warming up to Bitcoin, banks are building crypto rails, stablecoins are getting regulated, AI is replacing labor, tokenization is digitizing real-world assets, geopolitics are destabilizing short-term markets. That combination equals volatility now, infrastructure later, opportunity for the patient. How to stay level-headed. If you want to survive this phase, zoom out. Not financial advice, but Bitcoin and other cryptocurrencies have crashed harder before and recovered. Accumulate and dollar cost average when you can. Watch institutions, watch the moves being made, while everyone else is distracted by headlines and geopolitics. Follow capital flows. Diversify intelligently. Maybe some BTC for macro hedge, or some smart contract cryptocurrencies. Research cryptocurrencies that have global utility and real-world use cases that will impact the way we use money, store data, or tokenize assets moving forward. Select infrastructure plays, AI equities stocks or some trusted and reliable ETFs, some gold and silver, cash for volatility. Never trade headlines emotionally. The market transfers wealth from the impatient to the disciplined. Final take. States are buying Bitcoin, banks are building custody, robots are replacing labor, gold is flexing, retail is nervous, the economy is shifting, institutions are calm for now, oil prices are likely to surge when the market opens on Monday, following the attack on Iran by the US and Israel. What more can we expect in 2026? Is this a system upgrade? Upgrades are messy before they're profitable. If you found value in this breakdown, hit like, subscribe, and drop in the comments. Are we witnessing the biggest financial transition of our lifetime? Because from where I'm sitting, this is what a system or economic transition looks like. Stay updated and do your own research. Peace.